All right, I'm back, everyone. How's everyone doing? Good? Okay. Lots and lots of things happening the past 24 hours, as usual. So what I'm planning to do today is just go over US and China trade tension, because it's definitely very chaotic, what is going on at the moment. I think there's a few things that we need to cover, and the first thing is the macroeconomic fallout from the U.S. China trade war, because that's one of the biggest things. That's one of the biggest topics that has been discussed in the last, I think, was 18 to 24 hours. Next is, of course, the FX market response to the tariffs and policy uncertainty, and how the central banks are reacting, and how the currency devaluation strategies can work into our favor. I would say favor, because as traders, everyone knows that we can go long and short. So it doesn't matter if the market is going up, we can make money. If the market is going down, we can make money. If the market is going down, we can lose money. If the market goes up, we can lose money either way. So it's just, a sense of being able to understand the chaotic scenario, the confusion, the whole thing that is happening, and trying to catch an opportunity on that. So I guess today will be just to wrap up the week. Was such a busy week. And then from there, we should be good to be trading next week. But as usual, before we go any further, I need to put the risk disclaimer up. So I'm going to leave it there a minute or two, so you guys can go through, and then I will be back and we can start that. Okay, let's get started. All right. So, is anyone here sort of understanding how deeply this market has been going through ups and downs and sideways and everything? With how trade policy can directly impact the markets, but the U.S. China tariff was initiated during the Trump administration, and with the U.S. sort of imposing tariffs up to 104% on Chinese imports, and then China retaliated with 84% tariffs on U.S. goods. So we pretty much, let me open the charts here. Sorry, in logics.com. Let's go into charts. Just going to be a little bit more chatty today. We got stopped out on New Zealand dollar yesterday. Let's see, Euro Aussie stopped out as well. And US dollar CAD haven't got in there. Okay. And CAD JPY still going and stopped up. Okay. Anyways, so we saw, I don't know if you guys saw, but have a look at these. I don't know if you heard about, but Donald Trump pauses most reciprocal tariffs, but hike China rates to 125%. That's me right here. That's how I am today. It's literally me waking up this morning and be like, oh my God, what this guy has just done. Okay. So crazy, crazy things. And I really don't know where he's going to stop. But anyways, as I say, it always started with 104% on Chinese imports. And then China retaliates with 84% tariffs on US goods. And we sort of witnessed a full-blown, trade standoff that disrupted the whole global supply chain. If we look to S&P 500, for instance, not 5,500, we had a comeback today, but, look at the big drop here. Look at that. That's a 1-hour trade. So all the way up from historical highs at 6,148 down to pretty much 4,800 in from April, what's that? February, in 2 months, pretty much. Crazy, right? And then in one day, it reverses pretty much 50% of the whole move. Well, that's something, beyond the expectation of any trader around the world. So the real consequence was the hit to the business confidence. Companies delayed investment decisions, cross-border capital flows weakening, the global GDP forecast is now revised down. JPMorgan, Chase, other institutions, for instance, they revised the US GDP projection now to a negative 0.3%. And they're saying that, it's combined effects of the trade policy and the market uncertainty. And I think that this uncertainty became the whole thing on the market. It's like a macroeconomic drag that is happening at the moment. It's spilling over into the employment, industrial production, consumer confidence, GDP, PMIs, not just in the US, but as on China as well. But globally, it's happening everywhere. We can look at any currency. I think, as a rule of thumb, I think trade tensions in the whole, because it happened before. Okay, for those who maybe be wondering, did that happen before? Yes, it did. But on a very, very smaller scale. We had that happening before, but nothing compared to this. Nothing compared. Okay. Anyways, so as I say, we can take this as like a rule of thumb. Most certainly happen, but it's not always that happen. But the trade tensions, they can create risk-off environments. And that's where safe haven currencies like the Japanese yen, the Swiss franc, or even the gold, being a commodity, they typically appreciate, and they appreciate very fast. And the emerging markets, they tend to suffer a lot. So if we look to USDJPY, we can see that it has been declining. Okay? It has been declining. So that's the main reason why we have the Japanese yen strong, or even USDCHF. We saw that yesterday, huge drop down. And now a bit of a comeback, but look at that. Okay? We can see that majority of the market was trading. Look at that, like sideways here, or if you go Aussie CAD, for instance, it was trading sideways as well. And then a big move down. We can go like euro dollar. It's going to be the opposite, but we can go and see upwards. So let me just zoom out. So we were trading sideways and then a big move up. So, it's really interesting. Anyways, now, I think we will continue to have the rise of Japanese yen as a safe haven, as well as Swiss franc, gold. We just saw gold coming back to $3,130 today. I think it is around that. Let's have a look again. $3,120, sorry. 320. So, it's really, and I've mentioned that this would happen, I actually was a good trader, didn't bought it down here, but anyways. So now with that happening, it can continue to go much higher. Let me just do something here, because what people didn't understand yet was that US doesn't want the other countries. Okay, we may have like a bunch of other countries down here. What he wants is China. All right, because that's exactly his enemy, as I think I would say. And China is such a free economy. Like everyone can go there and use it, exploit it, and then sell the products on the market and China won't charge anything from that, that US has been there always, but it's so expensive to do that. Why do you think Apple assembles his products on China? Much cheaper labor cost, right? Much cheaper. So if Apple is it's a USA company, why wouldn't they assemble on US? Because it's expensive. Simple as that. Right? So anyways, I think lots of things actually happening on the market. But what has been most interesting is the FX response to the tariffs and the policy uncertainty. I think the currency market is the one that hates uncertainty. It's the one that really, really can't stand uncertainty. And the Trump era tariffs, introduced in a larger dose of uncertainty. If we look to the Chinese one, for instance, let me just zoom out and go for a 4-hour chart so you guys can see more. Okay. That was the beginning of the year right here. So that is how the market has been trading this year. Pretty much on the opening. Okay, so not much change from the opening of this year. Anyway, so the Chinese one was particularly affected, as we can see in the last, since April. And the PBoC, that's the People Banks of China, it allowed to weaken over 2.5%. And that was a calculated move to pretty much offset the tariff costs for exporters. And this triggered the speculation about a possible currency war as well, where countries, they try to, devaluate the currency to boost exports. And Trump was very, very dumb, I would say, and of thinking that China would let that happen. You're like, oh no, we won't let that happen. And China just like, yeah, don't worry, all good. Because it's good for China, exports will be cheaper. And I think that Trump didn't saw that coming from China. And that was the last thing that he was expecting from them, to be honest, in my opinion. So the US dollar gained against most G10 currencies, driven by safe haven status a little bit and capital flows from investors. And then that was pretty much seeking shelter from the whole storm. But I'm talking about emerging market, guys, just so everyone knows, because some people may be thinking, oh, but the euro dollar has been rising. Yes, Aussie dollar has been falling. Yes, but I'm just saying, on the emerging market side. Okay. Anyways, so continuing, because the US dollar has the safe haven status and not the Chinese one, so therefore people buy US dollar and sell Chinese ones. Anyways, all of these, it came at a cost. All right, it came at a cost, and a strong dollar hurt US exports. And that will add further imbalance to the already strained trade relationship from US. If we look at NASDAQ now, I prefer TradingView to look at indices. So let me just use TradingView here. Just a second. So I can use this. Anyways, so NASDAQ, not surprisingly, but same as the S&P 500, I think was 12% up move here from down here. Yeah, 12% move, around 13% move. It spiked spiked that much, because that pretty much happened after the temporary tariff suspension, when that was announced. And that shows just how sensitive the market are to even minor shifts in policy expectation. So that's what I've been trying to say for everyone. I think the market is not looking to data points anymore. I think, like, we had an NFP last Friday. We haven't even moved the DXY. The US dollar didn't even flinch. Okay. Let me get it here. Economic calendar. Let me just last week to today. And then I will select USA. Thursday, Friday. There we go. So that happened on 11:30 p.m. on Australia time. So 11:30 on last Friday 11:30, right here. Okay. So I'm just trying to figure out, sorry, was on 4th of April. Okay. 4th of April. 11:30, right here. Okay. So that was the little thing of the NFP, the little move of the NFP. Okay. So for those who are interested, it's literally nothing. Okay. So if we look Friday, 11:30 was the release. So right here on this candle and this candle and this candle, that was the whole thing about the NFP. Okay. Right here. And literally the market it doesn't care about it anymore. It's not caring about CPI, PPI, PMI, GDP, maybe GDP now, because we are looking at recession, of course, sorry. But not PMI, PPI, all of those others. It's more looking into tariffs. Okay, what's going to happen with the tariffs? Plus, what's going to happen with the GDP? Is the economy getting to a recession? Is the economy not getting to a recession? So that's the whole thing for me. Okay, and that's what I'm looking to trade at the moment. Anyway, so if we look to some FX pairs from that, don't just track the tariffs. We need to watch the market sentiment. And even some policy shifts, like temporary policy shifts, like a 90-day pause or negotiation signals, they will move the currency. These are the type of events that will be moving currencies, not anything else. Okay, in my opinion, that's how is it going to be. We have a tough period ahead, very, very tough period ahead. Okay. Anyways, now moving ahead. So I've covered up the macroeconomic fallout from US and China trade war. We've just looked at the FX market. Not only FX market, I got a little bit, impulgated, let's say, and went to look at NASDAQ, S&P, some others. But yeah, we saw the tariffs response and the policy uncertainty. And now we're looking at the central bank. We're going to be looking at the central bank reactions and the currency devaluation strategies. Cool. All right. So both, okay, the Fed and the PBoC, all right, so the Federal Reserve and the People's Bank of China, they are the central point of this. They're the pivotal roles during this whole period that is happening. In the US, the Fed found itself in a corner, in a bend. on one hand, it needed to maintain the rates to manage the inflation, and then on the other hand, a strong dollar was hurting exports. Well, what did the Fed do? The Fed hinted at a more dovish policy, and eventually they cut rates to provide like a cushion to against the global headwinds. Now, if you look to China, on the other hand, they utilize the capital controls and direct intervention to guide the Chinese yuan value. And while that, instructing the state-owned banks to limit dollar purchases. So that effort designed to stabilize the currency without triggering panic on Chinese yuan. And that's why we see the US dollar Chinese yuan on a very consolidative area since beginning of this year. So since here, we haven't seen any more moves from that. Okay. Really, really interesting. It's really interesting. I think we've also seen this playbook from other central banks, especially in the GCC, the global cross, where the currencies are pegged to the dollar, as well as the oil volatility driven, partially by trade policy. They pretty much force those economies to adjust the fiscal and monetary strategies to maintain the currency stability. I think to follow central banks' guidance, we have to be looking at these types of releases at the moment. Let me just drink some water, guys. My throat's still a little bit dry from the last couple of days, but anyways, so following the central bank, as I say, following central banks is the first thing we need to be doing. Okay, it's the main point that we have to be looking, because we have things like Fed saying one thing, and then the People's Bank of China saying the other thing. It just doesn't help us. Okay. Anyways, so I think that would be the smartest way to be trading FX at the moment. Now, how can we position ourselves into the market? I think the best way would be to be looking at gold. Okay, would be the first one. Let me just open gold here. I think gold would be the first one that we would need to be looking at the moment. Apart from that, if you want to, gold has been a good long option, but not at where it is at the moment, in my opinion. It's just because it's a little bit too high. And right here would be the most best scenario down at the bottom here. But it just depends. If your strategy says you can continue to long here, that's good. That's your option. Or you can just wait for pullbacks and continue to go high. Anyways, it's up to your strategy. I'm just saying that gold would be a good option to be trading around this scenario. Euro dollar would be a good one as well. I think euro dollar can continue to extend its gains. I think, sort of, I've mentioned that it would come at 111. I'm thinking right now it could come a little bit up. It could come higher, like 112, 113, but maybe we have a pullback around this area and then a continuation up. Just not too sure. Would have to check that. But yeah, I think that these two would be the best ones. Japanese yen as well. Japanese yen, really good. US dollar, Japanese yen. Looking to shorts that market, maybe a pullback somewhere around here, and then a continuation to short would be a good exposure to have on the portfolio, in my opinion. If remember that it's a 90-day pause, it's not off. So the market is buying theses that it doesn't make any sense. So in my opinion, it's really unrealistic to be buying those types of things like, oh yeah, 90-day, let's go and do this. I don't think would be the best option to be trading at the moment. Okay. So yeah, safe havens like gold, Japanese yen would be the best ones. If you trade indices, be careful. S&P 500, NASDAQ, or ASX, any other indices, just be very careful with that. I do think there's a huge probability of continuation of a lot of volatility into the market. So not looking to trade those assets. Anyways, so pretty much we've covered up 3 topics. Escalation of the tensions, the macro from U.S. China trade war, how the market responds, how the market enters to the tariffs and the policy uncertainty, the central bank reaction, and how should we trade, the strategies the valuation that we should be looking to trade. And that I say that is gold, Japanese yen, a little bit of euro as well. I think those 3 would be the best ones at the moment. Okay, guys, thank you so much. I hope everyone have an awesome day today or tomorrow, just depends where you're at. Have a good weekend. And as I say, the market has been punching everyone in the face, so be careful out there. Manage the risk well, and we should be back next week for Tuesday at 4 p.m. Australian time. Thank you, Sweets. Have a good one. Cheers, guys. Bye-bye.